she wants to raise the HOA fee. It's 2 units total.
That's
So,
an important
I don't
piece,
know.
right, everybody? So
Yes.
now that Janine is selling, they're holding her hostage,
Mhm.
right? Doing whatever is required to now they can make this whatever they want now, knowing that Janine has to sell this place. So they can up the condo fee, they can withhold the 60 certificate, they can do a whole bunch of anything they can to reserve it.
And
So
she
we have a question in the
does.
chat. It says, why did they increase it now? And go ahead, what were you saying?
Apparently now she's just started reevaluating everything, and she just realized out of the blue that now it needs to be upped, even though I've already asked her that question 2 months ago.
Yep, and now it's been
Spite.
marketed
The
at a
answer is
certain condo
spite.
fee. Yep. And now it's been marketed at a certain fee for the last 2 months, right? And you have a buyer under contract. Yeah. Oh, did we lose her? We lost her.
Bad timing.
What's up, Jason?
Said bad timing. Also, this doesn't give you an opening on your soapbox. I want to know, I got a question though. Is this the most relaxed you've ever seen Dan looking on camera?
Is this what?
Look at Dan Milanazzo.
I thought he was in a bathrobe at first.
He's just
Yelling.
I'm just not in my office right now. That's all.
It looks good.
I saw you pop in and had to say something. I was just waiting for the time.
Good to see you, Mr.
How's this
Milanazzo,
dude?
Good to be
as
seen.
usual. I'll jump in on an HOA soapbox. A lot of you have heard this already. I'll do it here anyway. So if you're going to buy a 2 or a 3 or 4 family condex or building like a multifamily that turned into condos, right? Whether that's because of a shared fire sprinkler, like holding retention tank, or if it's because of a shared septic or a shared driveway, whatever it is, right? Here's something you need to be aware of as the flipper, right? If you're flipping one of these units. Number one, right? What is the state of the exterior? What is the state of the systems? What's the state of all of the CapEx? Because the chances are, if it's a 3 or a 2 or a 4 unit building, those owners did not know how to properly run an HOA, a homeowner association. The HOA was put in place most likely by the developer or the person who condoed all 4 units and then sold, right? Sold off to 4 individual owners. And now you're buying 1 or 2 of those units. So you now have to get along with the other 1 or 2 people, because depending on the bylaws, you either have 1, 2, or 3 trustees of that association that control everything, and they will control your, in Massachusetts, a 6D certificate is required to close. A 6D certificate is issued by the trustees that say, yes, this unit is paid in full of their condo fees up until this closing date. If they do not issue that 6D certificate, there is no closing in the state of Massachusetts. So here's a potential strategy. I always go into a 2, 3, or 4 family very hesitantly when I'm buying one of the units, because I want to meet the other owners first. And I'm really nice. I'll bring an edible arrangement. I'll bring some wine. I'll bring some scratch tickets. And I check in with them, right, to see what the things are that they're seeing that it needs help. Is there something, do they have enough money in the budget, first of all? Which, by the way, the answer is always no. They've never collected enough funds. They probably don't have a really healthy reserve account. So you as the flipper are going to be looked at as like the savior. But they're not going to treat you as a savior. They're going to treat you like dirt, because you're going to be the one doing all these repairs and funding this reserve account, right? Just to get your 6D certificates to be able to close. So what does the exterior need? What are the systems that needed? And I then offer, as the quote unquote flipper or new owner coming in, like, hey, listen, it looks like the roof needs some help. Looks like the boilers need some help. Granted, I get you probably don't have the budget, right? Because for so many years, because your neighbor Claire has, been underpaying or not paying you for years, and you guys haven't been getting along, and she lets her dog shit outside and you get pissed off about that. I get it. How about this? How about if I come in, we'll do the roof, right, with our rehab. This is, by the way, an extreme example, but I've done this. We've done this before. I'll take care of the roof. I'll also fund the reserve account by $4,000 or $5,000. Okay, I'll take care of all this stuff and add it into our budget, so I know what I have to take care of and come into this deal with. But here's the deal: like, I am gonna to help you guys out. I'm also gonna sort of take control of the association. We're gonna move it into a different kind of bank account. You're still gonna be a signer. There's still gonna be signers on it, but we have to make it clean. Clean books, clean new reserve account, clean new bylaws. Right? If you guys are okay with me coming in and I'll help with the roof, I'll help with the heating, I'll help with the cooling, I'll help with the floors and all that stuff. But we need to have, my attorney has to have some control of rewriting to make sure this is exactly what it needs to be going forward, so that you, along with the new buyer, you're not in the same position that you're in with Claire, right? You're not fighting with people because of this and this, because now we have clear bylaws and clear understanding as to what the fees are going to be, and that there's no special assessments needed, because I'm taking care of the roof, I'm taking care of the heating, I'm taking care of the big items. I need control over the HOA if I'm going to do something like that. If I don't have control, I'm held hostage, right? We're held hostage by the lady who has no idea about real estate, no idea about special assessments, no idea what she's doing, but she knows she holds a piece of paper over my head that she can hold on until I pay dearly for it. Fencing, landscaping, whatever it is that they might want. Is it legal? No. Right? It's in the bylaws. They have to go by what's in their bylaws. Problem is, most of the homeowners never read the bylaws. The developer did the bylaws when they developed or condoed those units. No one ever read them since. Right? So that is the challenge with condexes, townhouses, any HOAs on a small level. On a big level, right, there's usually a professional management company. They're in charge of the bylaws. They have 3 to 4 trustees, like really healthy reserves. But on the small stuff, you really need to step in there even before you close and know who you're dealing with, because they're going to be your partners on the deal. That doesn't help. I don't know if Janine's back. That doesn't help Janine, because she's now at the end of it. But can they raise the fee on you? It depends on the bylaws. How much notice do they have to give the owners? Right? What if there's sales in escrow? Is that specific clause, or is that condition in the bylaws? Like, what if something is in escrow? Guaranteed it's not in the bylaws because they're not that detailed. Right? But that's definitely a question that I would ask Meg. Megan, right, is assuming she's the attorney for you guys. She does the condo docs a lot too. She helps kind of take those over and helps rewrite them. But make sure you talk to the attorney. Like, what are your options at this point? Can she raise the fee prior to closing? And if she can, there's a disclosure. You have to disclose now to that buyer, hey, unfortunately, right, the association just raised the fee. What do you mean association? Isn't there just one other neighbor? Yeah, she's kind of a bitch. She raised the fee. Knowing you're coming in, I don't want to live with that
for
anymore.
conducts like that. She can't like unilaterally change that, right? I mean, isn't it, unless that's written in the bylaws that she has that power? But if it's a 2-unit condo, typically one unit owner doesn't have the power to unilaterally change that. But I mean, depending on how much the fee is, if it's something that can be handled as a one-time assessment, then obviously it hurts the sale, but it's something that the seller, Janine, could kick in as part of a credit towards the buyer. Or, you could work out something with the buyer to say, hey, we're going to go ahead and we're going to pay the increased fee, as a seller credit. You know what I mean? If it's going to be an extra $150 a month, whatever that is, we'll give you the additional credit for that to help support it, and then let them battle it out. But I definitely don't think that there's any reason why the existing condo owner should be talking to the seller in any way, shape, or form, because that's bad news. That's her trying to literally sink the ship.
100%.
It is.
Yeah.
Well said,
Agreed.
Dan. There is some condexes, right? Depending on who has more living area, more bedrooms, more square footage. Sometimes there's a 55, 60, 75% voting rights, which sucks. They control the whole thing, right? I don't know how that is. Janine, no, she's back now. Janine, is that the case in yours? Or is there a 50-50?
Yes, she does have the larger unit, and she's the person that condoed the building. So I'm sure she planned all of this around her best interests.
My thought is this: like, you I think from what I know, I think you're gonna make out pretty good on this. Like, pay to get rid of her. You'll still make out pretty good. It's more profits than you thought you were gonna earn. But like they talked about, I think Dan
If we
said,
close it.
Pay the special assessments. Be like, I'll give you $5,000 in special assessments fees to help out with the such.
Yeah.
So you don't up the rates on the people that are coming in. What happens when it's done? Well, that's between them. But I mean, it eats into your profits. But if your profits are really good, then it might be worth it.
Yeah. Yeah. We just want to get it done.
Some
obviously.
profits is better than no profits, I guess.
Thank you guys. Sorry, my phone died, so it kicked me off halfway through. I'll watch the replay to get all the details on that. Thank you.
Next time,
Oh,
I
good.
expect you at your computer with your camera on. Show us what's important to you. I'm hurt, Janine. I'm hurt.
Deal. You can watch my 3-year-old next time, and I will do all of those things.
All right, cool. So Janine next time is going to be on her phone, not for the camera. Unless Kyle wants to watch 3-year-old. Kyle, you down?
Do what you got to do.
Awesome. Well done, Janine. I wouldn't throw more than what Jason said, though. I wouldn't throw more than 5,000 at that problem. 5,000 for a special assessment on whatever it is that she wants to raise the fee for should be more than enough. Otherwise, like Dan suggested, I would throw 12 months of the extra condo fee to give that as a credit to your buyer at the closing. Just say, hey, listen, the fee is changing. And we didn't know this prior to escrow, so we'd still have to keep this deal together. You guys okay if we pay the first 12 months for you, or the first 24 months.
Okay.
Anthony,
I will be
$25
reading
pounds
bylaws
gift card.
tonight. So if anyone needs some lovely reading material, I have plenty.
Oh God, I'm so busy. Sorry.
Can you just dump it into the Chat GPT thing and have it tell you to give you the gist of it?
I have never used that. I don't know.
Yes, if you have a PDF, you can upload it on the bot and ask them to summarize it for you.
I did not know that. That's amazing.
That's wild. I think it's a scanned PDF. I don't think it's like a computer like Word document generated one.
It's so PDF. It's so good.
Just do select all, copy and paste.
That's wild. Can you drop that link into the chat, Dickens?
Yes, I can.
Thank you.
As a tip too, it's obviously a very busy site. A lot of times we can't get access to it except if you're in the early morning or like in the evenings like now. During the day, it is a very busy site and you might get locked out. Although they've been getting better, right? They have more servers now, Dickens?
They do. They will,
Yes.
after so many hits in a given day, they'll start slowing you down. But it took me, I think, a week. You sign up and about a week later, I finally got my access to it.
I got mine like 3 minutes later.
Yeah.
Shut up.
Sweet.
Yeah, I got mine. Or if you use it a lot, they just start a paid service now where you got prioritized. It's $20,
Pro.
but I think the free one. I use mine after 9 anyway, after 9 p.m. anyway. So for 2 reasons. First of all, it can be addictive, so it can throw me off what I need to do for the day. So I use it at night, so I know everything is done, so I can either get ready for my next day or play with it. So if I get sidetracked, I'm not guilty. I don't feel guilty.
That's why I can't show anybody the AI art thing, Mid-Journey. It's you will lose so much of your life using that. Been making graphics on it. It's insane. I'll save you all from it.
Hey Nick, what's going on, bro?
What's up, Sharon? Good to see you.
Hey, sorry I couldn't come on camera or microphone. I was driving, but yeah, it's a long time. The last time I think I seen you was at,
brother. Welcome back.
Yeah, I think you had a in Gloucester. I think you had a flip that you were showcasing and running the numbers on, and I was there. Jasu was there, but ladies and gentlemen, me and Nick, we go back like 2008 when he used to work for BNY Mellon, and he was the manager there. And then he said, "I'm going on this path for financial independence and going in real estate." I'm like, what? He's just leaving as a manager, just leaving? This was right before the crash. Remember, Nick?
That was it. We were there for when Lehman went down. Yep, that's it.
That's right. Sorry, don't mean to put your personal business out there, but it's a true story.
No, they all know. Oh, they all know all my story. I share that story all the time.
How you doing, though?
Doing great, man. Doing great. For those of you who don't know, if you're currently in a W-2, I heard a bunch of people throw stuff in there. W-2s are great. W-2s are great until they no longer serve you, right? Until the cost of being in a 40, 50, 60 hour a week position is costing you more by being in the position than it is to going off on your own. And it's not even just financial cost. It's the cost of, are you the best version of you when you're sitting in that seat? So is a funny story, which Sharon just mentioned. I had my resignation letter typed and in my desk for 6 months before I turned it in. I knew that was my path, but I was too afraid to pull it, right? As we talk about golden handcuffs, we talk about clinging to safety. We could talk about just clinging to the comfort, to knowing what we know of where we are. Like, I like to go to this place in the morning. I get my coffee here. Everyone respects me here. Everyone knows me here. I have my responsibilities. Like, I oversee, 28 people. Like, this is a really cool gig. Until there's something in the back of your head. There's something in your heart. There's something there like, is this what life's supposed to be like for me? And if the answer is no,
that was right when they sent you to India too. I think. You remember that? To Pune?
I do. I remember it very well. That was great. You remember my life more than I remember it, Sharon. That's pretty interesting. But that's a message for anybody out there still in their W-2, right? Like, it's powerful. Stay with it if it serves you. But I would say every 6 months, like, is there a cost here? What's the cost? I see a lot of people nodding their heads. I see a very powerful couple guys.
So Nick, can I expand on that a little bit too? I get torn about that too, right? So I'm like, okay, so it's easier to get qualified for a loan when you got a W-2. But then I'm like, you know what? No, that's not true unless you want the loan and your name personally. But if you want it in your LLC, then you would just go and get a DSCR loan, right? So these are things that you didn't know about. So it's like when you grow into the real estate world, you start to learn these tricks of the trade and because you don't, like you said, you don't want to get tied and boggled down to golden handcuffs. If it's time for you to leave, it's time for you to leave, and you'll figure it out. So yeah, and that was my preconception, thinking that you need a W-2 to show to the banks that you're qualified, you're more than qualified to pay back the loan. But there's other ways to skin a cat. You know what I mean? It's not one straight line in real estate, as you know.
Well said. Well said.
Everyone here, though, like he said, DSCR. Does anyone here, put it in the chat if you do, want to know what DSCR means so we can explain it to you? Y'all know it? Y'all good?
Yeah. What's DSCR?
Go ahead, Jason. There's going to be people who probably don't know, so you can explain it. Go ahead.
Let's have Sharon explain it. You want to explain it, dude?
Well, yeah. So basically what they do is asset based. They don't look at you personally. They're not looking at your DTI, whereas a bank would. So they're looking solely at the asset and see if it would, if it's with cash flow. They use a metric for that, whether it's a single family, condo, or multifamily. But that's basic. I don't, unless you guys want to expand on it, but.
It stands for debt service coverage ratio. So
Correct.
basically most banks want
metrics for that.
1.25. And they don't take into account, they take into account your credit score, but not your DTI, which is one of the biggest things, because my DTI is like 70. It's pretty bad because I have a short-term rental, and they don't count short-term rentals towards your income, but they count the debt of the mortgage until you actually file on taxes, which is one of the detriments of short-term rentals right now. So I have to use DSCR loans a lot of the times. In fact, I may be using one of my 42 Fox Street if I don't sell it off market, because the fact that I can't qualify for a regular loan.
What are you
I'm just gonna
finding?
say
What
too.
speak?
Go
I
ahead,
was going
Sharon.
to say,
Yeah.
what are you? I'm sorry. I was just going to get into the little weeds of things. What are you finding for interest rates nowadays for these DSCR loans?
Oh God, what I'm finding is interest rates are typically around 9 when I'm looking at them, 8 to 9, and closing costs is what is the biggest thing, because you can get interest only at 30-year or 40-year amortization, but the hardest thing to me is closing costs about 5% is what I'm finding
Ooh,
with certain these things.
so that's hefty.
It's hard to dish out that. Like if I do my 42 Fox Street, if I do it on a conventional loan, 7-1 ARM, which I'm trying to get my DTI online, I'm paying 3,000 to 4,000 closing costs. But if I do it on DSCR, I just don't like Oopa Loompa bread. Sorry guys, no idea why. If I do it on a DSCR loan, yes, it's interest only, so my payments are lower, but I'm paying 5%. 5% is what, 15 grand? So it's 11 grand more. So is it worth it? That's the thing I got to figure out.
Steve's saying conventional loans are much better if you can qualify. So Steve, I would agree with you. I formally would agree with you. Are you seeing much better than 8 to 9 right now? Because conventional, we're seeing 6 to 6.5 on commercial.
I was quoted 6.5 to 8.5 yesterday, the day before.
Is that conventional or a DSCR?
On a DSCR, a DSCR.
DSCR loan.
Oh, that's nice. I need that name. My conventional loans are between, I locked in at 6.2 and 6.8 for a ARM.
I would shop it.
7-1 ARM.
Go ahead, Sharon.
I would shop it. I would shop it like anything else.
Yep.
Yeah.
I'm not gonna lie to you guys. There's a piece in this. I don't know if anybody relates with me on this. There was a point where we had 16 entities, and going conventional, was it worth the extra 3% savings when I had to disclose, right, like every single piece of income and expenses going through those 16 entities and showing all the bank statements, showing all the tax returns, showing all this and that, and then going through all the questions. Like for me, that was an easy decision to go like low doc, no doc. Like I'm the reason they created low no doc stuff, not predatory lending, but because I was just freaking lazy. Didn't want to do it anymore.
I think the biggest thing to realize with DSCR and stuff like that is there are many different loan types outside of the Fannie Freddie model. There's 15% down loans for investors. There's business statement loans for investors. There's all kinds of stuff out there right now. That's not 2008 friendly, but it's not just like, hey, put 25% down conventional loan to buy a place. Like there's much other stuff you can deal with and work with when you get into the industry. So that's the biggest thing I take away from this conversation.
What percent down are you seeing with your DSCRs?
2025 when we do DSCRs. But I know a guy that I met at a short-term rental conference that has 15% down loans for short-term rentals based on business financials. And Nick may know more about the internals of that because I haven't dug into it yet.
No, I don't know that contact. I'm 25% too for DSCR.
Yeah, I'd have to figure it out as to who the contact was. He's in my email somewhere. I just don't have him.
Yeah, cool. Good tip, Sharon. Good tip for anybody, right? Self-employed or not self-employed, DSCRs have their purpose, right? DSCRs, and Jason mentioned debt service coverage ratio. So how many times does the net income of your property cover the mortgage payment? That's what DSCR means, debt service coverage ratio. So they want to see a minimum of 1, right? That's break even. That means you're making zero money. Most banks I'm seeing want to see 1.2 to 1.25. So you're making like 25% above your monthly mortgage payment in your cash flow.
It's also nice to double check. Like if you can't meet the debts 1.2, then you probably shouldn't buy it, right? Because
I would agree.
you're not going to earn any money. Like, what's the point?
Oh, I bought for appreciation, Jason. I don't need to
Oh,
make
that's
any
fine,
money
I
for
guess,
5
if you're
years.
rich.
I'm gonna wait. I'm in the long game.
How much cash flow do you have? I don't have much cash flow yet. I'm not David Green.
Or better yet, Jason, my net worth looks amazing. My balance
God.
sheet, you guys wouldn't even believe.
You're bringing this back to me. Ah,
Sorry. There's not just you. There's a lot of people teaching. There's a soapbox. There's a lot of
no,
people out
no,
there
no,
teaching.
no, no. I'm just
Check,
kidding.
just
Go,
do your,
go, go,
do your
go.
PFS. Like, let's see if you're moving the needle on your net worth. Let's see if you become the accredited investor, right? Do you have the $1 million in net assets? Do you have this and that? And then my whole thing is, right, I've had the net worth in 2010. I had the net worth that I needed to be an accredited investor. And then in 2011, it was all fucking gone. Why? Even if I didn't make a substantial change in my own businesses, the market can go bloop. And then all of a sudden your net worth goes bloop because you didn't do anything. The market did it. So what trumps net worth? What trumps, your balance sheet? Cash flow. Cash flow is king. Cash flow will always be king. I'd rather own a C minus, asset where the cash is cranking than, again, anything in Boston. I never want to own anything in Boston. I'm sorry. God bless you people who do, right? Yeah, it's a Class A market. There's tons and tons and tons of demand for it all, right? Lots and lots of out of country people are going in to try to get their cash into this country using Boston. But -3, -4 cap rates, I'm sorry. I'm out. I'm out.
Yeah. I guess my biggest thing is if you want to buy world short-term rentals, if you want to buy short-term rentals, you need to learn DSCR. Otherwise, you're gonna buy 1 year at max. Because the short-term rental, unlike long-term rentals, they don't say, hey, there's a lease. So I'm gonna count that towards your, I hate this hand thing, by the way. I'm gonna count that towards your revenue. But they don't count anything until the next year when you put in the taxes, which kind of sucks, and I hope they change that one day. That's the way it works right now. Unless, well, there are cheater ways around it, but we're being recorded, so I'll talk to you guys offline. Do I know that?
Steve said, why stay away from Boston? Oh, go ahead. Go ahead. Someone else?
Oh, I have a question. So my challenge is that I'm having a hard trouble trying to scale. I have 10 doors right now. But my peers though, they got like 50 plus. I'm trying to get to that low, and I'm having a hard time trying to do it. But I have a small like HELOC that I can tap, probably some other sources, but not enough to scale to that level. So what are you guys doing for scaling and growing your business?
I guess I want to know why you want to be at that level.
Yes, Jason. I was going to say it if you didn't. Why? Why, Sharon?
Thanks, Nick.
Financial freedom.
What about your 10?
Financial freedom. Huh?
What about your 10 units? You're not free yet? That'd be the melon salary is only at 10 units, man.
I do well with those 10, but I think I would like to see me at 100 at least. See what happens. And if I get tired, just sell it. Huh?
Dude, what's your financial freedom number?
You know what? That's funny because I haven't even calculated it. But I can tell you this. I just picked the arbitrary number.
If you don't know your destination, how do you know which way to run?
I'm just enjoying the ride right now.
That's a good answer, dude. That's a really good answer to that. But I would really push you to say, like, what do you earn now? What's your financial freedom number when it comes to expenses and where you want to be? Because then you can figure out what doors you want. Like, there's what Grant Cardone has a freaking jet. Do you want a jet? I don't want a freaking jet. So I don't want the same amount of stuff he has. I'm happy with the life I have now, so I need less doors than he has.
Right. So I get what you're saying. But and I do okay right now for myself. But I'm on this like generational wealth thing. So I would like to see me pass something down. You understand? It's not about me with the material things. I can care less. I mean, I don't really, I'm selfish. I really treat myself, but I would like to pass what I built to the next generation. And that's what I'm on.
I like that. I also like that you're sharing, man. I appreciate it. Let's make fun going kind of in the chat.
That was awesome, Mr. Ron.
Thank you,
To
dude.
answer, were you done with that, Jason? I apologize.
I'm
Jumping
done.
in.
It's all you.
You're good with that one?
Yeah.
So getting from 10 to 50 units. I see some fantastic notes in the chat. One from Marcia, right? We can all do this alone, Sharon. We can all just jump in and buy units by ourselves, right? And you can do that using DSCR. You can use raising private money. You can do that by, you know, challenges, right? I'm assuming you know how to locate value add assets that are off market, right? We can all do it ourselves. What you can do it faster by partnering with others.
That's true.
As a lot of you guys know, and you all heard my stories, most of you heard my stories, I have serious deep-seated control issues from years and years and years, and some really tough partnerships. And yet, I knew that if I wanted to go where I wanted to go, the only way around that is to open myself back up to relationships again, to partnering. And once I've done that in the right way, once I did that not and without like withholding and being like, well, I really don't trust because of this thing that happened, and therefore, you know, we're gonna partner, but I'm gonna do all of this, right? Like once I got rid of that attitude and just sort of let the energy go, right? My net worth, not that that means shit, doubled, but my cash flow doubled too, which is pretty cool. So, Sharon, I think what Jason was trying to say to you, and this is a very, very important thing that we all need to know. Yeah, it's cool to say I need 50 units, I need 100 units, I need 300 units, right? Like with those, you think comes higher cash flow. There is absolutely a moment of diminishing returns in there. There's absolutely a moment where you're going to need an asset manager. You're going to need an on-site property manager. You're going to need an on-site maintenance person. You're going to need to hire at least 2 VAs to control that, or at least in very expensive software to help you maintain, right? And as you move up in units, you have to move up to nicer software. So there's diminishing returns there. And then it becomes another question of why. If it's cash flow only, you're going to want to find what number you need to get to get to the number you want to get to for financial freedom. And then there's the comfort level, then there's the thrive, then you can have fun with it after that. Be it partnerships, be it picking up units again on your own. But there's also like, how do you know when you pull the trigger? Right? For us, it was like, I need to make $200 per unit per month net cash flow. If it meets that number, I make the offer. I don't care what the list price was. I put it in my Excel sheet. I needed it to make $200 per month per unit net monthly cash flow. Listed at, 600,000. Oh, that's cool. It makes money at 325. It makes my number at 325. So that's going to be my offer. Sellers don't like to hear it. Mrs. Seller, you're probably going to be really embarrassed by my offer. So we're probably not going to chat about that right now. What is your goal? Like we already talked about, your goal is to get to Florida, to help your family member that's in need, to help this. If you don't care about, easy and moving on and helping with your capital gains, I think a realtor is the best option for you. Right? I think we're going to list this on the open market. You're going to get a lot more money for it than I could probably pay you. And I have an amazing real estate agent or a real estate office, and I'm happy to help you through that transition.
And if you're a realtor, you can take that referral fee.
Absolutely. And you should. It's your lead.
I think the biggest thing I took out of your talk right there is people move towards pleasure or away from pain. So you need to find out that pain point, that pleasure, and you need to dive into that and say, hey, this is what you're looking for. I can help you get there. Or this is what's going on. I can help you get out of it. If you can find those things, it'll help you get to where you need to be when it comes to the offers. Now, not everyone is going to be like, cool. We have someone we're working with right now for a mobile home, not mobile home. What are we working with right now? Oh, we're working with cabins. I think it's like 16 cabins in New Hampshire. And they have pain. And we've tried to help them with their pain, but they're still having trouble with it.
Yep. Their pain must exceed, right, their ability to stay where they are.
And you need to know what you want for is what you can offer.
Change. Huh?
You need to know what your bottom floor is, what you can offer, and you need to not go below that. It's a numbers-based system, not feelings. Residential real estate is feelings. Commercial/investments is numbers. So don't get tied to a property because you love it. Right, Kyle? What do you think?
Absolutely. Mhm.
Those of you who don't follow Kyle, what's been one of your the biggest learning lessons over the past 6 months?
Ooh, I've had quite a few. I'd say there's Mario again. I've been knocked around a little bit from I have a 3-family, or I said that earlier, my 3-family in Leominster. And a couple of the lessons from, finding 5 inches of water in the basement after not being at the house for a couple of days, having a handyman that I absolutely loved working with in the past and used him a bunch, screwing me around when I needed a deadline. I needed something done by a deadline. Trying to think of what else happened. I had a couple smaller things happen, but basically all of those, kind of group together. It's that, things like this are going to happen on the journey that we're on, and that's perfectly normal. I feel like you just have to be able to, like see like what you're looking at. Like for me, it was like, when I first opened the door to go down to the basement and seeing that my floor was waxed and it was you could see the glaze of the lights on top of it. And I did not pay for somebody to come and wax the floors, to be clear. But but basically my point being, is that things like this are going to happen, and you have to be able to, like, just take these things for what they are. Like, take a breath and step back for a second and like rationalize and figure out, who the people are that you need to call to get these things, closer to the finish line, get them taken care of. For me, I didn't really know what to do, when I saw the water. It kind of took my breath away, I'm going to be honest with you. But after thinking about it for a little bit, it's like, oh, okay, that kind of sucks. You go over, shut the water heater off. For me, it was a water heater that burst. Luckily, there was 2 isolation ball valves on top of the tank, shut off the leak. All right, what's the next step? Run to Home Depot, buy a pump, a cord, a couple hoses, and you set it up and you just do it, And I feel like, in my opinion, like things like that just take time of kind of like getting knocked around a bunch to really like set in. And for me, that's in the past 14 months that I've owned my property, that's hands down the biggest lesson that I've learned, is that things like this are going to happen. As much as, everybody glamorizes, the wealth building, the passing it down to generations, all the stuff that we know and love dearly, that also comes with challenges that, all of us are going to need to get through, and it's perfectly fine. And that's 100% why, we have rooms like this and to be there for each other. And yeah, it's things like this happen, and it's part of the journey, and we just have to be there for each other and not throw in the towel ever.
Well said. Well said.
Yeah. So you're telling me the guru courses where you just buy a multifamily and all the money comes in, you don't do anything, those aren't right?
Not exactly.
Mailbox money. Mailbox money.
Mailbox money.
Just
It's
magically
real, right?
appears in the mailbox.
It's a wonderful journey, but there are bumps, right, Kyle?
Of course.
Right, Anthony?
Oh yeah.
Dan Milanazzo, how many wet basements or wet assets have you happened to take care of?
Yeah, it's about 300 unit deal that's soaking wet. I mean, personally, yeah, I've had some wet basements and some issues, but yeah, I mean, it's not all, warm and fuzzy. You knock out a Class A, 300 unit Class A building because the stormwater backed up a little bit. Yeah, that's ugly, and that is a professional, management company, Class A, and they got hit with a multi-million-dollar loss. So yeah, it happens.
Happens. I'll let you guys know though.
Dan,
Go ahead,
sorry,
Jason.
go. I said Dan missed intros. I want to know a little bit more about him.
Go for it, Dan.
It's getting a little late. I don't want to tie anybody up, but yeah, I am an asset manager, and my former W-2, I was running about 5,500 units of CapEx work and long-term planning, things like that. So right now I am doing that for some smaller, though larger, multifamily owners in the area, kind of supporting their asset management needs and construction management needs, scopes of work, things like that. I'm also an investor. I have about 12 doors, currently in discussions on a few more. We'll see what happens there. But yeah, my big press is just growing my consulting business right now. But I'm always looking for more doors, 6+. I don't like playing in the four and under realm anymore. I like the bigger commercial stuff and kind of inching my way up to the double-digit deals. So that's where I'm at.
Beautiful. Beautiful, Dan.
Great.
Kevin
Thanks,
had a
Dan.
good point here in the chat. Every property should have a sump pump regardless of whether or not you've ever gotten water. Cost for placing a pump in a mechanical room is pale comparison to rehabbing the basement. Amen to that. Amen to that.
True.
Mario, once again,
Cheers.
is referring to his marriages as the biggest disasters of his life. I can actually, I'll also second that, Mario. That
I
have been the
missed that.
biggest
Who said
financial
that?
setbacks
Oh,
for me
Mario.
that I've
Of course, it's a
Sorry,
good
Maestro.
idea.
As we're approaching 8:56, I want to ask you guys: was this pretty helpful? Was this helpful? Like, would you get one
Yes.
nugget? Just one nugget tonight, right? If you didn't get a nugget, it's okay. Like, let us know if there's any like closing thoughts. Like, does anybody want to ask a direct question? Marcia fires back. There we go in the chat. Brilliant.
Thanks, Maestro.
Brilliant. Yeah, there were a lot of topics. We were all mini golden nuggets. Good. Are we getting some good feedback here?
Would you guys
I want to
come
share with you
back to this
guys.
again?
What is it?
Will you guys come back to this again? Do you want to see more of this?
I know. Hopefully they'll be doing this. I do want to share with everyone here on the call tonight, right? Now there was a bunch of you who came. We had an October weekend event last October, and it was, I would consider nothing short, for me too, life-changing. It was a life-changing event for me.
Agreed.
And we had a lot of people here who were in that event. So a lot of you guys know Gordon Thornton. He and I are also leading, along with people here in this chat. We're going to be having professionals come nationally as well as local experts. We're going to talk about how to start and scale your real estate business. It doesn't matter if you're in rehabbing and multifamily and short-term rentals and in commercial or syndications. We're going to have our partnership and SEC attorney come in to talk about how to raise capital. We'll have obviously Megan there chatting about how to properly wholesale in this market and to go over our national purchase and sale agreement. We're going to have Jason there talking about STRs. We're going to have Mike Gomes talking about how to build a sales team and how to close more deals. There's going to be a bunch of people there. Miles Barrio is going to be there, the real estate amputee. But not just are we going to talk about how to start and scale and then automate your real estate business. We're going to sprinkle in things called life evolutions into the 2 days. It might not be as powerful as being live in person, but I promise you, we are coming up with some serious shit, which reminds people like Sharon, like 50 units sounds good, 100 units sounds good, 100 deals sounds good, 200 deals sounds good, right? I want to bring my company to 100 deals, 200 deals a year. Well, what's the why behind that? And what's the cost? The cost of not doing it and the cost of doing it and scaling the team to where you think you want it to be, right? And we're going to go through a lot of that stuff, and you're going to leave that weekend. I promise you right now, you will never forget some pieces of this weekend ever happened. So if you guys are interested in that, it's like $97. It's for Saturday, Sunday, April 1st and 2nd. I will type the link into the chat. It's reiaccelerated.com/live. That's the event. But if this appealed to you guys, there's going to be some Q&A there. Obviously, it's going to be just 2 days focused on you and on your business. Definitely not a pitch fest. You're going to have from all the experts. So would love to see you guys there. And for this one specifically, Jason, you can close us out. This is REI Unleashed. We're doing this 3 times a month, plus fix and flips, plus some Zoom meetings. So Jason, when's our next event for this one?
All right, let's hear event. What do you got?
That is, hold on.
I'm popping that link in the chat right now for those of you guys who are interested in signing up. www.reiaccelerated.com/live.
And I think I want to keep doing this online thing. I'm down.
Yeah, we had some good topics tonight. That's cool. And guys, go to the Facebook group. Don't forget to go to the Facebook group that Anthony popped in later. What topics do you guys want to hear about? We can bring in national experts, national speakers to chat with you guys in these. Right? We had John Heyer, the world-renowned tax strategist, tax attorney, and tax CPA. And he now lives in Puerto Rico. He was sharing like some crazy shit that he's come up with on solo 401ks and how to do self-directed IRAs the Mitt Romney way, right? And bring it to $10 million and how to fight the IRS and win every time. He'll represent you. It's expensive, but he's worth it. But he comes to chat with us once in a while, right? We have short sale, national short sale experts coming in.
I can bring him in.
What, Jason?
I have a guy who writes chat AI bots besides our guy. I have another guy.
Oh, you have another guy. Cool. Yeah. Oh, that's another thing for the weekend event. Rick will be there talking about AI bots and chat AI and how to implement it. And he's the guy that Anthony was talking about too. But listen, you got one, two, Jason.
Let's bring Rick into this.
Yeah. Good stuff. But we all good. 9 o'clock. Next REI Unleashed event. Kyle just posted March 21st, 6 p.m. at Lord Hobo Brewery in Woburn. That's 1 week from today. If you're live or close to New England, come on by to Lord Hobo, 6 p.m. We got Megan and Mario chatting with you guys on the Platinum panel. And aside from that, guys, happy Tuesday. Go have another beverage. Go network more with your wives or families.
Thank you all. I appreciate y'all.
Awesome. Cheers, everybody.
Thanks, guys.
Cheers. Thanks.
Bye, glass.
Yep.
Cheers.
Cheers.
See you, Nick.
See you later, Sharon. Nice to see you, brother.
Yeah, I'll check you next time.
You got it. You got it. Talk to you in a bit.
All right. Bye-bye.
All right.
All right.
Oh,
That was a ton of fun. This was an awesome event, Nick. Holy crap.
Before you leave, Dickens, or was it Nick? Which one used Chat GPT or whatever the hell it is?
We
to
all
write
use
an
Chat
ebook?
GPT.
No, I don't. I'm learning it now. To write a book, like I did a foreclosure book 17 years ago, and I was reading it. You know, I read hundreds of articles to write it down to 7 pages. One of you said you used it to write an article or something.
Yes, I do.
I don't, but I know people who are now using it to write short ebooks on how-tos. Right? Like I wrote my own how to avoid pre-foreclosure book, how to avoid foreclosure.
Yeah. So you and I did the same thing, but I read like hundreds of articles, then condensed it down, hours and hours, and I got it down to 7 pages. I used to give that out at free. You know?
Right.
But
Mario,
yeah.
do you still have your seven pages?
Yeah, of course.
Take your 7 pages, upload it to ChatGPT and ask it to rewrite it for you.
Oh, okay. So Marcia, you know how to do that? All right, great.
Okay, if you want, we can schedule a time.
Good, Mario. Copy paste.
Yeah, I'm not doing that shit. Okay, Marcia, I know you're an integrator because I'm just wearing my flower. I got the little flower.
That's wonderful, Mario.
There you go.
I'm glad we got this still on the recording. This was good. We got to keep this gold here between the two of you.
It is gold. All right. The one mistake I did, it was so long ago, I forgot to collect people's emails. So I did 5,000 downloads during that whole time, and then never once did I get an email.
You need to put it in a funnel.
Oh.
Yes.
Yeah, but you know what? I did get at least 30 deals out of it, so it was worth it. So, but now I need to produce it right, get a funnel and all that stuff that Marshall loves.
Possibilities are endless.
Okay, with that, I'm gonna go and get my hair done.
Bye, guys.
With the flower here. Bye, everybody.
Have a good night,
See you guys. Great to see you from you. Thank you. Do this stuff here.